A summer of persistently high inventory and sagging sales have median price suffering a bit, although now that inventory is coming down, we'll see what the rest of the fourth quarter has in store for us.
Let's check out what's happened over the past few weeks, and then we'll zoom out to look at long-term trends. All right, here's a chart showing what happened between September and October of 2025.
Okay, yes, when we look at the month-over-month numbers, we see that we had a few more new listings in October than September, not a ton. Pending sales, again, sagging a bit, down 1.2%, and closed sales up 1.6% from September to October. Although, again, the number is so low, it doesn't take much to move it. Days on market are up. Median price is down another 1.2%, which doesn't look like a lot, but when we're talking about $1 million median price, 1.2% is a significant chunk of change for you sellers out there. And the number of homes for sale now down 5.8% month over month.
All right, well, let's check out some longer-term trends, and let's get started with new listings.
Right, so when we look at new listings, we see that last October and this most recent October, not much difference there with detached homes or condos, although year to date we're up quite a bit as far as new listings go in both the attached and detached categories. And then the 12-month average, we're up 17% on new listings overall. And that's in detached. And then of course, 23% more condos on the market. So that's kind of been quietly the story of the recent real estate market, is just kind of a lot more condos, and condos taking longer to sell countywide. When we look over a longer period of time here, going back about 5 years, we see that, we really peaked out with new listings here in 2022.
We came pretty close this year,
Yeah,
though.
we did. We came close, although we didn't quite get there. But then we just don't have the exuberance in the market that we did in 2022.
That was an exuberant year.
It was right up until about halfway through, and we'll talk about why in a minute.
Yes, well, you can also see the seasonal trends here. Things pick up at the beginning of the year. They start to really take off, and then they level off in the fall into the winter, and then pick up again in the new year.
Yes, and right now we're in that downward trend with new listings, which is fairly good news for a lot of sellers out there, just because the same kind of thing is happening right now that has happened for the last couple of years. It was most pronounced in 2022, but you see it in 23, 24, and then again here in 2025.
You've got a spike in January for every one of those years. So,
yeah.
That would really help to shake things loose if we could have rates come down a little bit more. And let's have a good, solid January
yes.
spike in real estate activity.
Although it's also the reason that I'm telling all my sellers now it's not time to pull your house off the market and put it back in January, because now the competition is waning. And in January, you're going to be right back in the mix with a lot of competition.
Well,
again.
New listings, that doesn't necessarily mean you're going to get more for your home. That could actually be the opposite.
That's what I mean. Yeah, the more competition, more new listings just means you've got more competition.
Right. Higher sales volume doesn't necessarily mean you're going to get more for your house.
Not at all. In fact, you probably going to wind up with less, but that's speculative.
Right, well, what's our next slide here? Closed sales.
Mm-hmm.
What about what's going on with closed sales?
Okay, so closed sales, again, October last year, October this year, almost identical for attached and detached. Year to date, closed sales almost identical. So 2025 is looking a lot like 2024 when it comes to closed sales, and in fact, looking a lot like 2023 as well. It's just this, I keep saying it in the weekly Market Watch updates, pending sales have been very, very steady for the last 3 years, which translates into about the same number of closed sales year over year. So, there's a finite number of buyers out there. And when you have a situation like we had this summer where inventory balloons up, you see what you're seeing now eventually, which is sagging median price.
More inventory, same number of buyers. That's supply and demand.
It's very, very basic supply and demand, yes. And then again with closed sales back here in 2022, that was the pinnacle of the last 5 years, and we've just been sort of loping along for the last 3 years.
Culmination.
The culmination, indeed.
That's sort of an obscure reference. But
Yeah,
some of you will get it.
Some of you might. And if you do, put it in the comments.
What movie were we referencing in that obscure reference?
Culmination.
Okay.
Yes.
Let's see. Median price. Okay, I think most people are most interested in this slide. So what's going on here?
Yeah, well, so the 12-month average, we're up 1 point on detached homes and down almost a point with attached.
Evening out there.
And again, and I keep saying this in the weekly updates, when we go zip code by zip code, we're seeing the same thing. Median price in 2023, it came up a little, it's down a little, it's up a little, it's down a little, although very, very flat. So we have not seen a lot of equity building over the last 3 years. We've just kind of been hanging on to the to this median price, which is sagging at the moment. And we'll see what happens.
Just a little bit, though.
Yeah,
we're
just
talking.
Well, we had a 1.5, I believe, a month before this one, and now 1.2%. So,
but not the crash that some people had been telling us was happening.
No,
not going to happen.
Not the crash. But the funny thing about that is, it's sort of like slowly boiling the frog, I guess. Sellers really want more for their homes, and they're pricing their homes as if they're going to get more, and then you wind up chasing that median down, and 1.2% this month, 1.5% last month, you're up to about 3% now, which again, as a percentage of your $1 million home is a lot of money.
Which is why it's super important to price correctly at the beginning.
Absolutely. Listen to your realtor.
Yeah, so your listing doesn't get stale and sit on the market, and nobody wants that.
No, nobody likes that.
All right.
And then of course, over like I just said, when we look at this historical by month here, back in 2020, we're all the way down in the mid 800s for detached homes. And here we are just barely over 1 million right now. And then, with condos, it's come up, but again, it's just relatively flat.
All right, well, let's talk about inventory of homes for sale.
Yes, so as we've been, this inventory and rates are kind of the name of the game right now, because we've had this very steady sort of plodding along of closed sales. When you have more homes for sale, the same number of buyers, prices suffer. Right now, we are just a little bit below where we were last October with detached homes, a little bit over with attached. But the 12-month average, we have 46% more homes on the market on average over the last 12 months, and 64.5% more condos. So this is what I'm talking about. There's more condos on the market. It's harder to sell a condo right now, and condo prices are, again, not crashing, but they're softening and continuing to soften.
Could be good news for folks that are looking to get into the market. I mean, a lot of us start off with a condo. I know we did, but 20 plus years ago, we bought a condo in North Park, and now we... Yeah,
you work your way up, you climb the ladder. Not very many people are sitting there going, wow, I really want to buy a condo. It's kind of your
stepping stone.
It's a stepping stone. It's an entry point. And then historically by month, in terms of the inventory of homes for sale, we are higher right now than we've been since, last year we had a little bubble here. But before that, we haven't seen these inventory levels, aside from a little bit last year, we haven't seen these inventory levels going back to 2019 or so.
All right, well, let's talk about interest rates. Are you ready to talk about interest rates?
Let's do that.
Let's do it. Okay, here's the Freddie Mac Primary Mortgage Market Survey for this week.
Yep, so we are up over the 7-day average is up 6.22%. And, we were down at 6.17%. And I get so many questions all the time still. People read the newspaper, or I don't know if they read the newspaper. They read
They get in a time machine and read the newspaper back when Alan Greenspan was calling the shots.
Right. They read the news and they see that, the Fed lowered interest rates, but that doesn't really change mortgage rates.
That's the federal funds rate. That's
Right.
the rate at which banks lend each other money overnight.
Right. And that overnight rate, if the banks are loaning you money, they're going to mark that up because that's what banks do. Also, it's the 10-year Treasury yield that really is far more reflective of where interest rates are going. And that 10-year Treasury yield has been relatively volatile over the last few months. It's been trending down, which is what pushed rates down. You get these CPI reports, jobs reports,
PPI reports.
Right. But then in the meeting where the Fed actually lowered the federal funds rate, what Jerome Powell, I keep wanting
Not
to,
Greenspan.
Yeah, I'm living in the past, man. Jerome Powell, they lowered rates, but then they verbalized that they're going to continue what they call quantitative tightening, which is selling of mortgage-backed securities, selling of treasuries, which increases the yield on those 10-year Treasury bonds, and that drives mortgage rates up. So had he kept his mouth shut about selling those mortgage-backed securities, we might not be up a little bit this week. But
Alan Greenspan never would have done that.
Yeah, he would have kept his mouth shut. But this is what the Fed has been doing since 2022. They stopped quantitative easing and began quantitative tightening, and they're continuing to shed these mortgage-backed securities. And, a lot of economists argue that this is good. We don't want the Fed to be holding so many assets. But, if you're a realtor, you want lower interest rates.
Well, not just realtors. I mean, folks who want to buy or sell,
right,
or people in the trades, or, a lot of people would like lower interest rates so they can go on about their business.
Right. I guess the good news is that rates have been coming down despite the quantitative tightening, which means that we're seeing slightly lower rates without a lot of Fed intervention in terms of buying up all these things, which is what was keeping rates artificially low before. So maybe it's a sign of a strengthening economy, or maybe we're just getting lucky right now.
All right. Well, either way.
Everyone
likes
way,
to get lucky.
Yeah, lower rates are better for all of us, for the average person on the street. Better to see lower rates.
All right. Are we good for today?
I believe we are good. Thanks for tuning in, and stay tuned for more great real estate information. And we'll see you right back here.
If you like this, if you enjoyed this video, please like, share, subscribe, and comment, and we'll see you next time.
Yes.